What's up, and welcome back to How to Invest in Commercial Real Estate. And this is an awesome episode for us because it is episode 100.
100.
Woo-hoo.
I can't believe we actually have done 100 episodes.
I didn't think we'd do one.
I think most people wish we wouldn't have done 100 episodes. They're like, would you guys have stopped after 50? That would have been awesome.
You think anybody's watched all 100? I haven't.
No. These guys editing the podcast.
Yeah, the gallery has watched all
Biggest
100,
fans.
but we don't expect anybody else to watch all 100.
Yeah.
But anyway, we've had a ton of fun, right? We started this as kind of in the middle of COVID.
Pet project.
Yeah, a passion project. You know, we need to let people know what we do because, you know, we may have only closed 3 or 4 deals that year. So how do we let people know about this awesome opportunity 3 or 4 times a year? It has to be more.
Yeah. Yeah. We started downstairs in my house with the goofy headphones on. And
we did have the headphones.
Now we've got this awesome.
Well, and I was skeptical at first, but I've really enjoyed doing the podcast. And, you know, we're not under any impression that a bunch of people watch it. But for us, it's been really therapeutic to go through what we do, how we do it.
Yeah.
It's helped us hone in on what works, what doesn't. And hopefully we've inspired somebody out there to get involved in commercial real estate that wouldn't have otherwise invested.
Yeah. I'm amazed at the number of people that have reached out because of the podcast. They found our podcast and they've reached out to us. It's awesome.
Kind of blows my mind every time.
Yeah.
Hey, I love your podcast. You do?
We're like, yeah, we do that. Wow.
Really?
Appreciate that.
But hey,
Thanks,
what we
man.
want to do for the 100th episode is for those that haven't watched all 100, is to kind of recap some of the funny moments, some of the highlights, maybe some of the more inspirational moments.
Yeah.
And so stay tuned. Right after this, we're going to give you guys a quick overview of some of the best moments that we've had.
Yeah, so I think I'll go first. One of my just favorite things overall, there's 2 kind of dual-fold. I love having guests on. I've learned so much from some of the guests we've had on. Some of the guests, you know, get nervous and maybe stumble in the beginning, but a lot of these people are really experts in their field. I know last week we had Sujay on talking about hotels. We're still in discussions with him now talking about hotels. We've had a lot of people on that have sparked this relationship. I know the self-storage guy. I referred some business over to, what is his name? Scott, I think. Because somebody was asking me about redevelopment of an old center into self-storage. And I'm like, man, I know a guy who's done that.
yeah.
So that's really been one of my favorite parts is just really the networking and learning from all of these other experts to figure out that. And I'll have Aaron chop it up here, but I think we should do 100 like half-second clips of Joel's wardrobe of the different shades of like gray and black.
Yeah. Start with the lightest and go to the dark.
Hey, I even wore a color for the 100th episode today.
Man, you're celebrating.
Yeah.
All right, Brian, favorite thing.
Well, I'll tell you, for me, I've actually learned during the podcast. I didn't have the experience that you guys had when we started this podcast 2 years ago or whatever. And when we started the company 3 years ago, I didn't have the experience that you guys did. And so I've actually learned from you guys. So that's really what stood out to me the most.
Appreciate that.
One of the things that sticks out to me is how much Brian talks during the episodes.
Just on and on.
Like he just has so much to say and
Thanks,
he just
guys.
never stops saying it.
Thanks, guys.
All right, well, enough of us rambling on. We will get to the montage. I hope you enjoy, and we'll keep going.
Montage.
What is up, guys? My name is Braden, and welcome to episode 001 of How to Invest in Commercial Real Estate. I'm joined by my 2 co-hosts, Joel Thompson and Brian Duck.
What's up?
Oh,
I've been paying distributions 12 to 13% to my investors every quarter for 4 years, and I've never been to the property.
I looked into a statistic that said if you invested the maximum amount that the government would let you invest in a 401k over the last 40 years, that 1% that the financial advisor is keeping costs you $1.3 million out of your account.
I love this job because there's real justice in the amount you receive from the amount of effort that you put into it.
I remember we looked at this one deal, and it had its own sewage plant on it.
Yes. In North Carolina.
They literally processed their own sewage. Yeah, I would say a really good indicator of how you need an attorney is when you talk to them. If you feel like an idiot, you definitely need them, and they're probably really good.
The more of the bank's money you can put in at a lower interest rate, the higher your returns go. You're not going to take action unless you're inspired and motivated. and you believe that you can achieve it.
You have to buy a property not worth the profit that you made, not the $3 million. You've got to go buy a property that's worth $5 million or more. Is that right?
Yeah. So if you sold that $5 million property, you not only need to go place that $3 million back into real estate of like kind real estate, but you've got to go buy at least $5 million worth of property. You can't just say, hey, can you not sell that for me? I'm interested at $5 million. Just give me a month. Nobody's going to do that. Yeah. You need some sort of commitment, and a letter of intent gets that first step. So I would say, generally speaking, if you know all of your investors, 506B is super easy. You know, there's a lot of traps you can fall into in due diligence, and we've fallen in quite a bit. So we'll go over where the traps are and where you can save some money.
We want long-term capital gains instead of short-term capital gains, right? So it's all about taxes.
You're entitled to a portion of profits for doing the deal and making the investors the money. You gave them the first 8%. You've probably been doing that a little bit. Now there's extra proceeds, and that's where you as a sponsor can start to make, you know, a percentage of the profits on that deal.
Right, you're over $100,000 in income a year
just by doing one deal.
Just by doing one deal.
Basically, you've got a way to make a living on just one deal.
Well, a couple of recent deals that we've sold, we've seen, you know, multiple years of interest only, you know, 5, 7, even more sometimes for select sponsors. Low 3s on the interest rate, kind of depending. Over the last 3 to 4 years, I've seen way more aggressive debt terms. They'll shorten their due diligence period. They'll put up hard money on day one of the contract.
What? Who put? Pause. Hard money day one of the contract.
Yeah.
Because this property's potential, let's say, is to make $1 million a year, and it's only making $500,000 a year now. I can buy that on a 7 cap because I know even if I sell it in an 8 cap and double the revenue, I'm killing it.
And what we want you to understand is you will feel uncomfortable, but you're not going to get rid of that. You can keep reading books and you can keep going over the material, but at some point you're going to have to go for it. You'll have those, and when you get into the commercial property game, you're going to have to deal with lawsuits, and that's going to be part of your job as an asset manager.
Yeah, I don't think anybody should freak out when that first happens, because it's going to happen, and your heart's going to race.
Yep.
But it's a part of doing this business. It really is. That's another reason to take lower IR, higher cash on cash, like you were saying, because then you can take that cash and you can reinvest it rather than getting it at the end.
Most people, not everybody, most people, they could spend they could work 80 hours a week at their day job, and they're never going to make $1 million, a bonus. And so I think people should take time to try to find a game that they work on the side that they could win in a big way. What we want to talk about today, and Braden, you're going to go through it, is how easy it is to form an LLC. It's so easy. It's cheap. Mm-hmm. You don't have to have an attorney, and you don't have to pay a bunch of money. Everyone's going to have to come up with a system on how they find the deals that they want to buy.
We're all itching to get back out and spend our money like we used to.
Mm-hmm. Yeah.
And I think that's going to be a boon, a huge boon for sales.
If you just call a random GC and say, hey, I want you to come to a meeting once every other week, and I want you to provide your input. I want you to do all these things, and then maybe we'll get a job in the end. You know, there'd be a lot of them who'd be like, no.
What I did, I used to get these offers for these balance transfers. Once you did one of them in the mail every day.
Oh, yeah, right.
Well, I couldn't apply for one every day. It would start to ding my credit. So I had this idea that I would just save them up and apply for these credit cards all in one night.
That's
that way they'd all pull the credit at the same time and it would still be high. And so I get approved for these credit cards, like 10,000 a piece. Maybe let's say it was 8 to 10 credit cards. Wow. And I got all these balances on these 0% cards for 2 years or whatever it was. Sometimes they were even longer than 2 years, 3 years. And I shipped all these balances to one credit card, $100,000. Wow. And I used that as
first of all, no wonder you're not allowed to do this shit anymore. It's because of you.
Somebody gamed the system.
You ruined it for everyone.
Thanks. So, you know, if you raised $1 million from your investors and, you know, that it was 10 investors and they each had $100,000 and you gave them the option of, hey, you know, we can keep this 12% cash on cash return. We're giving you 12% every year. We can keep that going, or we can give you all of your money back, but we'll give you a return that would equate to 8% on your investment. Mm-hmm. So they would say, wow, I get all my money back, so I can invest that somewhere else, and you're still going to give me 8% as if you had my money, and we get to keep the asset and pay down the debt and let it appreciate some more. They're going to be like, yeah, sign me up.
Another opportunity within the power center space is carving out pads. And I think historically, you know, you had a 5 per 1,000 parking ratio. where they really didn't take into account the cross-shopping component. So what you had is a lot of these shopping centers that were overparked. And I think when you look at that, coupled with cities recognizing it and lowering those parking ratio requirements, that's another area where you can really not only add,
Interesting.
Again, financial value, you can actually bring another use and another concept to the center that maybe just what it needs to kind of revitalize it.
I just Google Oklahoma private equity. It's like, okay, they'll understand Norman. They know the college town. I end up calling Braden, picked up, sent him over the deal. So yeah, we're interested. I didn't hear back from you on it. And then it goes to auction, and then you reach out back again for the deal, and you're like, you guys still like going to go forward? It's like, well, we had another investor that was with us up to a certain point, but if they goes past it, we might be a player for working with you. Nothing really came from it, and then you guys were watching the ticking time on the auction. And what did it get up to?
I'll never forget. I was in an interview at 68th and Lewis in Tulsa, and
Yeah, apartments we owned.
oh my gosh, and we were just watching it, and
I think we could have bought it for like 10 million.
8.
8 million, and it went for like 16 million.
Well, the way I got started was I just had a friend who was doing it, and I talked to that friend. It was actually Joel, who's in the Bahamas today and couldn't join us. But
somebody's got to do it.
yeah,
There's some value to a national brand like a Kitty Academy, even though the franchisee may be new or only has 1 or 2 locations. It's still better than Joe's Childcare, on the corner.
First of all, if you're sending your kid to Joe's Child Care on the corner, stop.
Yeah, stop right now. Our Village South property here, it's a 100,000 square foot retail center here. Across the board, we're up 20-30%. And so what was underwritten at a 12% cash on cash, this next quarter, July 1, we'll be paying 25%.
wow,
That's insane.
And by the end of the year, we may be paying 30%.
So we increased the revenue, just by having $200, $700 a month apartments, and we increased it 4%. That's an extra $67,000 a year just in free cash flow.
Just in income. And not really for doing anything besides just keeping up with inflation.
One of the benefits of Synergy right now is we can get to that concept level really quickly, so that makes it pretty inexpensive for the client up front.
And like Tom mentioned earlier, it really matters if the deal goes south. But if the deal goes south, you're probably going to get sued. Somebody's going to read this document. And I'm telling you, if you commingled the funds, if you didn't pay your taxes, if you paid yourself too many fees or didn't follow what you wrote, you're going to get in trouble.
But something psychologically, when I come to them and I say, hey guys, I've been doing this for almost 20 years, and we have a great track record of delivering 20% returns on people's invested capital. And the first thing they look at me, they're like, whoa, man, are you trying to scam me, bro?
You really need to reverse engineer how many deals you need to look at based on how many deals you want to buy. So, right now we're trying to do 3 to 5 deals a year. That's comfortable for us. It fits our pipeline. It satisfies everyone's needs. So we know that we need to be looking at, 50 to 100 deals a month, pretty easy to meet that goal of finding 1 a quarter that we're convinced this is it. This is the deal. We're going to push this one. I like it. What do you want? What do you want, and what the stopping you from going out and getting it?
Once again, you can make money on regular deals, but this is about how to really make a big gain. And we've, on those auction sites, that really catapulted our real estate business, because we purchased at least 3 centers through that auction type platform, making several $1 million total on those deals that we wouldn't have been able to make if we weren't both on those sites looking for the opportunity and willing to take the risk that it took to bid on them. You can literally fund your lifestyle with the overflow without ever having to sell or get rid of your nest egg.
yeah.
And then the more you invest, the more you grow that nest egg, and the more that nest egg throws off that cash that you get to spend every quarter.
It's the same thing. You got to project it out. You got to let people know, hey, I'm looking for shopping centers. I'm looking for multifamily, because somebody's looking to sell multifamily and somebody's looking to sell those shopping centers. They just haven't identified us as a buyer yet. And then, like you said, just investing and being in the game. It's like sports betting. I don't know if you guys are into sports betting, but that can take, a really crappy game and make it super interesting just because you've got $20 on the line. And it's kind of that same thing with commercial real estate. If you've got $5,000 in there, you're going to pay attention to why it's working or not working. You're going to read the investments reports closer. You're just going to pay attention to that thing, and whatever you focus on expands.
And we've talked about the compounding. When you take out the passive income from real estate and you don't have to pay taxes on it, and then you go invest it somewhere else, the tax savings that you don't have to pay is really compounding really quickly.
For sure. Debt should be a tool to use to buy assets that go up in value.
Real quick, a sample of an option in a lease is, hey, this is a 5-year lease, but 6 months prior to my lease expiration, if I let you know I want to extend for another 5 years at that rate we discussed in the beginning, which is typically always at the advantage of the tenant because inflation's a bitch, then they get to accept that. They send you a letter and says, hey, we're going to accept that option, and our rent's going to be cheap. But if they didn't have that option, their rent may be way more. It could be way more.
Well, that's similar to what we did in Vegas, where we had an old restaurant, and he's like, we got a tenant that wants to go in this restaurant. You need to buy that restaurant. And so we did.
Yeah, and so we had money to them within a couple of weeks. I mean, it was that's why we're great partners for them. It's rare you can call somebody and they wire you.
We can react pretty quickly,
really quick.
A lot of people have self-directed IRAs and 401ks, and the market is teetering on these all-time highs, and we've been on this 12-year bull run. Correction is going to happen.
Yeah,
we're going to raise interest rates, and there will be a correction in commercial real estate on some level. But I sure wouldn't want to have all my money in the market at a peak. I would be wanting to diversify that across a few different asset classes.
With rising interest rates and rising costs, companies aren't going to want to build new apartments probably right now, right? Because it's a little riskier. So that means
you'd have to be crazy to build new apartments right now.
You would, really crazy.
So Joel's in the middle of a ton of brand new Class A apartment development that I'm sure will go great, but that was really funny.
What I would say is if you don't have any uncomfortable goals, then you're not setting them big enough.
Yeah.
But what are you giving yourself conscious to go to work on?
If you're not actively working and shopping the debt, then you're not getting the best deal. I mean, the amount of banks we talked to on this and the amount of time we spent getting this debt is probably the most on the whole deal, is just getting the debt involved. So when I say that's a big piece, it's a really big piece.
Well, like he said, I'm Clinton Taylor, owner of Woodland Creek Furniture here in Tulsa. And Joel and I have had relations. I shouldn't say relations. Edit that shit out.
And it gets a little skewed when you start to analyze an IRR under a year. But right around a year, we should be a 1.2 to a 1.35 equity multiple. Pretty easy. I feel pretty good about it.
So there's always a way for investors to get preferential treatment if they bring more value to the sponsor.
Most of the time, people will not put in the work. Most of the time, it's this first category of like an email forward, an offering memorandum. That's not going to get a deal closed, guys. We start getting calls from the tenants about some shit on our sign.
What, you mean like some dust and stuff, or like
that was my first thought as well.
Yeah.
And then we get out there and there's actual human feces on the sign. On the sign, and blew my mind. Absolutely blew my mind how there is shit on
feces
on the sign.
Start early. If you're listening, start early and just get money invested. Whether it's at 10%, 5%, 15%, get your money in. Nobody's motivated to help you at that point.
Nobody.
You are on your own, and whatever you find that's negative on that property, you own it.
You will.
You will find something negative, and you own it now.
We lost out on millions of dollars of lost opportunity because we couldn't build the relationship with him over the phone. And I said, his name is Andrew Thalen. We've since done 5 deals with him. We're about to close our 6th deal with him. And it's been an amazingly fruitful relationship because we both keep pouring into the relationship. We bring deals their way. They bring deals our way. We compare notes. We provide debt and equity, they're providing deals. And it's this amazing relationship because we fanned the flame and we grew it and we fed it. And now it's something, that's feeding us. If you pull up the map, you can see every other shopping center in the corridor has carved out their pads for, a Cane's or a Wendy's or a little pad site in front of the shopping center. And we can easily fit 3, if not 4 pad sites in front of this property.
I use this as a life principle, but a lot of things in life, you have to figure out what not to do. It's not necessarily what to do. It's not where to go. It's what not to do.
As my favorite quote in Wolf of Wall Street, it's a high frequency. It's If you have crappy accounting, your property is worth less. It's just a fact. Here's a few things that if you see, you should definitely throw up some red flags. It should definitely cause some concern. And you should definitely maybe take a moment and say, okay, these guys told me to look out for these things. I need to make sure I know what's going on so I don't get burned.
If you're in construction and you own your own company, you are just a natural born gambler because that's what we do. We gamble. We're saying that we can complete this project for this amount of money, but also that we're going to submit a bid that's not going to be too high. We have to be in that sweet spot of it's not too low to where the project can't be done, and it's not too high to where the project doesn't happen.
It was a guy that owned a bunch of tanning salons. I call him. He goes, "Well, I had the money in the bank." Okay, why didn't you pay it? Yeah, like that was his. Somehow his explanation was, well, he had the money, he just chose not to pay us.
That's great.
Well, that doesn't help things, dude. But so back to the most important topic, me.
As I started to dig in, I saw it as a way to quit my regular job, my engineering job that I had for 35 years.
Mm-hmm.
And so it took me that long I hate that it took me that long, 35 years to figure all this out. So that's what I'm saying. I hope that people that are listening to this decide, well, maybe they want to do it a little quicker in life.
You know, when you're headed into a recession and interest rates are going up and you want to sell, a seller may consider a 5% reduction.
Right.
I don't know what his basis is, but if he's about to get a $2 million check and he's like, okay, now I'm going to get a $1.7 million check, but if I don't take this and I wait another 2 months, rates are going to go up even further.
Right.
Or if we go into a recession, it's going to depress pricing. He may think that's a great opportunity to get rid of that property and get that money in his pocket. If you're a successful professional in the field of study already, typically you're going to get in even without an undergrad. We kind of wanted to take this from Rich Dad, Poor Dad and Cash Flow Quadrant. He talked about the 7 levels of investing. There's other lists of investors, and we kind of took a blend of all of those and came up with our own list. And as you're listening, you're going to instantly put yourself in the category that you're in. And we want to talk about the categories, maybe the positives, negatives, and then how do you move yourself up that investor list?
I'm from Owasso. I've been in Owasso 20 years now. These are new concepts to Owasso, right? It's not some chicken place. Like everyone's got like 50 chicken places, some new way to fry chicken and some fancy sauce that sucks and tastes like the others. This is not that, right? It's new, interesting tenants.
You have got to take stock of what you can afford. And I promise you, most of the stuff that you're buying, you shouldn't be affording unless that stuff is getting purchased with returns from your passive income investments. Mm-hmm. Okay, that money you can spend as frivolous as you want. But if you're taking your active earned income from your job after tax money and buying stuff with it, that's a problem. You should be investing that. I just tend to never want to negotiate out of fear. I will always call your bluff. If you're trying to scare me in any facet that I might lose or that something will be negative to me, my subconscious immediately checks that and I say, okay, well, I'm going to do the opposite of whatever you're wanting me to do in that situation. They're easily in the double digits on their original investment, but they have 100% of their investment in their pocket and they can reinvest that and get another 12, 15, 20% return. So they're double dipping. And now if you add the 10, 12, 15% they're going to be making on this deal, and if they reinvest that at another 12, 15%, they're at over 30% on that same money. That's why it's such a win for the investors.
Fantastic.
Don't be limited by the appraisal value. Is that use creativity, evaluate the property you're looking to buy, look on how you can improve the income, improve the tenant base, and just be optimistic about, hey, what could the appraisal be given market improvements, given some changes in the property, because the appraisal you get when you buy it is not necessarily what it's going to be worth even just 6 months later. In those moments, I'm trying to calculate expected value. I'm saying, okay, what's the likelihood that I'm going to make $3 million? What's the likelihood that I'm going to lose $1 million? Because both are real possibilities. And a lot of people get scared about losing the $1 million, but they don't understand that the $3 million, how real that potential is. Multifamily cap rates are lower than I've ever seen them in my lifetime.
And anyone ever see anyone's lifetime?
Well, I mean, yeah. So in my lifetime, cap rates are the lowest, and debt is approaching the highest that it's been during my investing career. So if I'm buying a multifamily deal, I have to be putting in a higher exit cap than I bought it for. And if I'm not doing that, then I'm basically setting myself up for failure. Well, there's a lot of people, they have a house and they have an extra, $25,000, $50,000, $100,000 that's not invested in the market, let's say, but they're like, oh, I could go buy another house, but they're thinking, I don't want to go buy another house. That's a lot of work. Yeah. That's a lot of risk. Mortgage payments and real estate taxes. And what if the tenant moves out? All those things are keeping people from not investing in real estate. And we're trying to make it easy. All right, here we go. Let's fuck it up. Is that a good intro to the show? No?
That's great.
All right, here we go.
I think less than a third of the stocks on the New York Stock Exchange pay a dividend. And I think that average dividend is like 3 to 4%.
Yeah, maybe.
So you're not getting,
maybe less.
Most people aren't even getting dividends. They didn't even know that, that was a thing out of the stock market. So really you're just seeing all of this money being lost and you're not getting anything in return. You don't see yourself paying down any debt. You don't see any cash flow. It's really just a bad day.
You just have to sit on it and hope it goes back up. That's all you can do.
There's good news is there's third-party companies that will do the lease audit for you. And they're pretty reasonable on cost.
And that's all they do is lease audits?
Well, it may not be all they do, but it'll be a service that they can provide. Okay. Feds met again yesterday and raised another historic 0.75 point rate hike. Painful.
Yeah, I felt that one. That one hurt.
Like you said, you can be cash flow positive and you can be making a profit, but in the eyes of the IRS, you're actually losing money. And so you can actually be writing off and getting a tax refund, even though you're making hundreds of thousands of dollars because of this big thing called depreciation.
Get out there and buy something that produces cash flow, right? Don't go buy something for your first investment where you're like, oh, this is going to go up. Trust me, this is going to go to the moon. Like buy something that pays you next month.
I see every dollar that I make as, a future $10, a future $20. It's working me toward a life goal. And so, yeah, I was cheap and frugal to a fault when I was younger, but I couldn't spend any of that money because I knew what it meant.
When you buy an asset, you're not just buying the land and the walls. You're also buying everything inside the building, plus all the land improvements on the outside. So, for example, carpet should be depreciated over 5 years versus 39 years. Your parking lot should be depreciated over 15 years versus 39 years.
You need to have a signed commitment letter before your earnest money goes hard, because once your earnest money goes hard, you lose a big piece of leverage. You lose, whatever your earnest money may be. I would say our average earnest money amounts $50,000 at least, roundabout. Sometimes it's a lot more. Sometimes it's less. Right,
like the investor list continues to grow.
Yeah. How many new investors did we get on our list in 2022? Do you think? You have any idea? Over 100 maybe? Or?
Easily 100. Easily 100. But I think out of those 100 new people that invested with us last year that haven't invested before, there's easily 25 people, I want to say. I mean, at least 2 brand new people every single deal, which is just amazing. Welcome back to another episode of How to Invest in Commercial Real Estate. And this is our favorite time of the year. It is distribution time.
Distributions.
And so the idea of it is that people can invest through the coin. So they can take a crypto and put it back it by a tangible hard asset, but having the security of the blockchain. And then the byproduct of the coin is that people can either pay their rent or they can get distributions, benefits in terms of longer term leases and those sorts of things with coin. And so the idea is as the portfolio increases in value, then the value of the coin will also increase. And so we're created this investment vehicle, but also the blockchain in order to help facilitate self-storage.
And so that's the power of getting a higher rate of return. And we've done podcasts on that. Is if you can increase the rate of return, then you reduce the amount of money you need to live the lifestyle that you want, which allows you to quit whatever job you don't like sooner.
What is up, everyone, and welcome back to How to Invest in Commercial Real Estate. And we thought it would be fun to do kind of a cool topic today because it's probably right around the time everyone is starting to give up on those New Year's resolution goals. So we wanted to hit February hard with just a reminder of why goals are important, a way of looking at them, a perception, and more of a motivation to say, keep on fighting.
Everybody gets to listen to us talk all the time, and they've heard some of our story of how we went from day jobs to retiring early or whatever it is. But Dustin's done that. He's doing some exciting things. He was able to retire early. And so we know the listeners want to hear his story on how he did it.
First, we wanted to take a minute and stop and talk about the Criterion building up in Owasso. It is finally open. We've got Keller Williams. We've got a medical spa, beauty farm. We've got a hair salon, Birch & Co. Our office is opening up. We finally have furniture in there. It's looking great. And most importantly, our co-working space is about to open. So if you are local, if you're Tulsa, Owasso, or anywhere on the north side of town, really, we have an amazing new co-working space with state-of-the-art stuff. It's all wireless, keyless entry. Everything is included, tons of cool packages, and you can get involved in that for $100 a month.
Yeah, unfortunately, the latest report last week, inflation looks like it ticked back up. I think it was either December or January numbers that came out. And so it looks like the Fed is going to continue to raise interest rates, maybe slightly more aggressively than we thought, kind of at the very end of last year.
And you guys alluded to kind of the bank crisis happening right now. And, you know, it's going to create a lot of opportunities for people to buy at a very, very good price coming in here soon.
All right, guys, if you've made it this long through the montage, I appreciate you watching. We appreciate you watching. We're going to do another 100 more maybe, but we will catch you next time on how to invest in commercial real estate.
Thanks, guys.